How to purchase your first rental property. Amateur versus expert. You might be wondering how to purchase your first rental property, but as you observe, there are just people who fail or who spend unjustifiable amounts with their rentals. Or you also see people who succeed or who have done good with their rentals. Luckily for you, Real Talker, we prepared a list for you on how to buy your first rental property in a noob versus pro style. Alright, let's get into it. Step 1. You should use your credit wisely when you start buying houses or other pieces of real estate. Buying a house with credit shouldn't keep you trapped in a particular field, as long as your credit score is as high as 620 to 640. Though credit scores remain an important factor when purchasing or renting a home, it's incorrect to believe that you must have a high credit score in order to purchase a home. Once you get past 740, there's no additional benefit in real estate. For example, if you're looking for a great investment and you're confident about your chances of success and why the project is so promising, even if your credit scores is not perfect, you don't have to worry because finding a good deal can make it worth it. Pros know this. Pros always look at buying a home from the perspective of the entire deal. Pros don't get caught up in things like, oh, I don't want mortgage insurance, I'm not gonna buy it. Pros don't get caught up on, oh, my credit scores and 740, it's 730, I just won't buy it. No pro would be caught up on that. They're looking at the entire package. That is what we want to teach you in this video. We want to teach you a lot about packages. Know that you don't have to be perfect. If you're anxious about, I don't want to apply for a loan because I don't want my credit score to get dropped or whatever, that's a huge mistake. A pro will know that your credit score is useful if you want to make money from it. The point of the score is to help you or at least show you where to start an effort focused on managing your credit score. You can request a free credit report by all three bureaus and we recommend making sure that you get them right away. If there's anything on there that you don't recognize, call the company whose name is on that report and solve the problem. Pros know that real estate is dependent on your credit score. Credit Karma also tracks your credit score to make sure everything is in order. If you're trying to qualify for a real estate loan, start with annualcreditreport.com first. They generally choose the middle score and they tend to be the best option when it comes to reporting scores. Step 2. Assets. The easiest way to buy your first rental property is to start by living in the property for a year. This is why I think it's maddening when noobs like to say, well, I'm going to start a family before I buy a house. Moving with kids is hard work, but you can start by taking it step by step. If you have kids already, don't worry, it's harder. The single best way to start a career in real estate is to buy a home and live there until the deed transfers to you, even if you decide not to rent out all of the rooms. Keep in mind that this only gives you a small part of what it takes to get started in real estate. Many American borrowers are getting low down payments and grants with $0 required to buy a home. Veterans can use their VA loan to get in the market with no money down. New borrowers prioritize cash they can put towards the monthly house payments, while mortgage insurance pros focus on large amounts of money in order to make a living. Mortgage insurance pros are looking for bigger rewards in order to break even. Step 3. Let's talk about income. And here's some really cool tricks for you. Lenders will usually want to see that you have income to qualify for a loan. And this makes sense. You gotta have the ability to repay the loan. That's actually a legal phrase. Ability to repay is a must. We say this because there are some awesome tricks you can play as well to prove you have the ability to repay. Here's the general rule of thumb. First, though you generally want 2 years of tax returns to qualify for a loan, if your income is going up, they'll average your last 2 years' income. So your income will be assumed that it's a little less than your last year. That's okay because they're averaging the two. Additionally, if you work in a field your degree is related to and advance at a rate similar to that of someone with 2 years experience, you will be deemed to have 2 years of tax returns. Also, a really big hacker. If you just graduated from college and you get a job in the same line as what you went to college for, you could be deemed to have 2 years of tax returns. The upside of going to college is that you might learn about the disadvantages of self-employment. Self-employment borrowers, let's say you earn $70,000 a year, but then you're like, haha, tax authorities, I'm not going to pay them as much money in taxes. I'm gonna write off $45,000. Excellent. If a lender looks at your tax return and sees that you made $70,000 a year and you wrote off $45,000, they can qualify you on $25,000 of income. The new law is tough on noobs, also known as new immigrants, because they have to pay more taxes to qualify for a loan. The pro knows the secret to buying a house and being self-employed. What they do is take their write-offs because the lenders won't count that money against them. But what do you know? If you don't have an income, we got a trick for that as well. And we ain't talking hard money crap either. That's gonna make you go bankrupt. Watch this. And this doesn't work for everybody, but we're going to mention if you don't have an income, that could be okay. Let's say you just became a real estate agent and you know you're going to make money or you just started making money, but you don't yet have enough money to qualify. The premise of this analogy is that sometimes they will use 1 year of self-employed tax returns and then your year-to-date profit and loss. However, if you just started shopping for insurance, it can be hard to know what plan is the best. So, where do you turn? If you have someone to help you decide and follow the recommendations of that person, please consider yourself lucky. A lot of people struggle with this. Most people don't have a knowledgeable trustee telling them what plans are worth buying, but will mention it anyway. You could ask a parent or family member to co-sign on a federally sponsored home loan for you, and it can be used in this instance as a non-occupant co-borrower. Relying on your dad to borrow money for you is a good way to lower the cost of obtaining a mortgage. Your dad can use his income to qualify for a loan with his signature. Today, you can buy a property by paying only 3.5% down. If your dad is a 1% owner, then you're also in the same situation. Additionally, if your girlfriend is also in the deal, she would own 50% of the investment property on top of whatever you own. This can sometimes create unexpected results that many people don't consider before getting into such arrangements. Isn't this risky? Like 3.5% down, you don't have an income. If you're looking for a loan, it's important to be confident about your job and confident about the terms of the loan you want. Some people may have proven their ability to make sales and be debt-free, but their commitment seems to not be strong enough to properly pay back their loan. If you and your significant other expect to both make $5,000 a month, you should not have a housing payment of $4,500 a month. You also have to be reasonable with your expectations. Maybe if your total income is over $5,000 a month and you're spending nothing on rent, maybe that brings you down to $2,000 per month. Step 4. Talk to a lender. If you have little experience with the terms on loans, talk to a loan officer beforehand about what you can expect with your specific loan application. It's okay to get help from somebody who's familiar with the process. By calling an experienced loan officer, you're virtually certain that your application will go through smoothly and quickly. You can try online lenders like Rocket Mortgage. They're a good option when you're starting out, but we recommend you try local lenders as they will help make your offer accepted by the seller. When you talk to a lender, please don't make the newbie mistake that so many people say to do, and it's just like having been a lender. This is the stupidest thing to do, and so many people do this. Newbies say, I want to get pre-approved for a loan. Oh, but please don't run my credit because I don't want my score to drop. Oh no. All that does is the following two things and sends a massive red flag to the lender. The letter A, you're not serious. It sends a red flag to lenders that you aren't serious about buying a home. There are enough real prospects for them, so they don't want to work with you. So you're not surprised when it takes a long time for your calls and texts not to be answered or that the deal is no longer available. Pros know this. People don't realize that an inquiry on your credit report will drop your score down a few points. But you don't have to worry about it for the next 90 days. In other words, when you run your credit, you get 90 days of formality before lenders have access to this information. As long as it picks up again in the meantime, your score will be back to where it was within the 90-day span. You won't have much trouble with credit limits if you apply for multiple loans in the span of a few weeks. Actors know well that actors are savvy shoppers, so they don't want to just give loans away. Take on your responsibilities with full payment and watch your credit score improve. It only gets worse when you don't pay bills or constantly apply for a new credit card. Generally, if you're going to be borrowing money, you will likely have to borrow in a different way depending on the country where you reside. For example, you might need a 30-year fixed-rate mortgage in the US, while in Thailand, it might be a 10-year fixed-rate mortgage with an adjustable rate loan. You have the option to make more monthly payments, but you're not forced to. A loan officer will find the exact monthly payment you'll be able to afford. And so, there are some really easy things you can do here. The easiest thing you could do is go to the Zillow mortgage calculator. This is not sponsored, but here's exactly what you'll do. Pull up the calculator and then move on to step 2. Once you download the app, you input a price and set an interest rate. You don't usually know what sort of license or trade your contractor has, so Zillow automatically predicts what interest rate a month might require. It's easy to get an idea of what the interest rate is. If a mortgage loan can't be repaid through income alone, an insurance policy can be taken out against it. A way to calculate the value of this insurance policy is by adding a 0.5% on top of the interest for every 10% in housing expenses spent. Taking an estimate from the general mortgage interest rate would be 3.5%, and property taxes are about 2.4%. California pays about 1.2%. Texas pays about 2.4% for property taxes. 1.2% is a new and cool pro trick. This means that for every 1.2% you pay in property taxes, your monthly payment will be what your purchase price is minus the last 3 digits. So let's say you're buying a house for $300,000 with an annual property tax bill of $3,000. You can then change the address to Texas and double the tax amount to make it $600 per year. It works for any price range. So now, we're going back to a tax rate of 1.2%. The new price is $400,000, and the taxes are still $400 a month. For example, if you live in the United States and you have double tax rates, the purchase price minus 3 digits will work for those prices. Just find out what the tax rates in your area are. In some cases, like a fair tax rate and when interest is an unknown, there are more calculations to weed through. So what we're going to do is go back here and put in $300,000 for the interest rate. Well, with 3.75% interest rate and $50 monthly mortgage insurance, homeowners insurance is reasonable. If you have HOAs too, that can be added. Personally, we don't like the idea of Zillow because it tends to limit our control. But if you want to see what numbers work for your budget and income, you can try different variations for home insurance. Step 5. Find an agent. The easiest way to find an agent is via Zillow.com by clicking the Agent Finder. Go to the search screen. Type in your zip code and start browsing residential options that are only a few minutes drive away from you. You'll want to find popular neighborhoods near you where smaller houses can be found easily and explore them before deciding on just one house that's closer to your ideal dimensions. This means it's easy for you to move into a bigger house after just 1 year and put both houses on the market. That is called bank hacking, because you're able to put 5% down in the first place, and then when you move, you can also put 5% down on the next one. The noob ends up buying a big house, stay in one because we want our dream house if we're going to buy, and then they don't realize that if they buy a 3-bedroom, 2-bath house, it's very difficult to convince a loaner that you're going to now buy a smaller house for living. A pro starts off small by taking on manageable projects and shopping for deals. If you do the work, it's worth it. So don't worry about getting over-leveraged in the process. When deciding whether or not to buy a property, ask yourself if you would feel comfortable doing a Craigslist transaction at 9 p.m. If your answer is yes, then go ahead. If not, move on. Narrowing down who you want to contact is easy with the silhouette effect, so keep that in mind. In today's competitive market, a buyer should reach out to an agent by mentioning their own name and say, "Hi agent, I'm so and so looking to buy in this price range. Here is my pre-approval letter from a local lender. Oh, by the way, here's proof of funds," which is just like a screenshot of your bank suite statement or whatever showing you have the money for your down payment. By doing so, it proves to the agent that you're a serious buyer. Begin your search with these factors before looking for properties. You'll be able to get the best deals and rise to the top of your real estate search. Even if you're brand new, make sure you have these factors in mind before beginning to research homes. Step 6. Many noobs begin looking for the cheapest house available. This is a mistake because you usually end up with something called, yeah, but is exactly what you don't want. And pros know this. Pros always look for non-yeah but properties. Yeah, but is a statement that you make to indicate a contradiction or give it some constructive criticism. Contrary, Yes are saying such as, wow, this house is great. Huh? Honey, what do you think about it? Yeah, but it's under a freeway. Or, yeah, but the lines pass through here and I'll glow in the dark when I sleep. Or, oh cool, you need to walk through this bedroom to get to another one. Or worse, they don't have the permits for that remodeling. Don't fall victim to the silly things that noobs fall victim to. Noobs also tend to fall victim to classic home buyer mistakes that start with looking for things that are pretty with staging and smell nice. There are a few tricks that you can use to make people think you are paying for something more than what is actually on the bill. The smell may go away after moving in, and all the furniture might be gone. This is because they wanted you to think it would be better, but it wasn't. They just wanted to overcharge you for a little makeover. Be very cautious when buying a model home. It will be more than likely to be different than what you're buying at the construction building site. The upgrades, glitz, and glam is all part of the game sales pitch in real estate. Be careful not to get tricked into getting upgrades you don't need or expect. With the popularization of turnkey properties, it has become more difficult to find fixer-uppers for sale. These are usually problem properties. When you look at these types of properties, you tend to find homes that were renovated with the purpose of selling. And not always, but often, the work is done by low-quality workers who'd use low-quality materials. Sometimes, there are some very high-quality flippers out there that would rather lose money than sell a bad product. It can be difficult to determine which site values the reader and provides quality content, as it's not always clear if it's a shortcoming in programming or they're skimping on any coverage or information. And this problem is very frequent. I find it deeply upsetting when we see newbies getting ripped off in this manner. This is why I'm warning you. Rather, if you want to buy something because you're too lazy to do work, then buy new construction. If a house is new construction, you are eligible for a 10-year builder warranty. It protects you from situations such as water damage or cracks in the walls, which would be your problem if you were purchasing an older home. If buying a flip home, there are no guarantees and problems caused by the home's flaws must be processed by the property owner. Pros look at real estate this way to protect themselves. And pros also look at the real estate for the sake of getting a deal. Let's not talk about getting a deal because that's what I've been alluding to here for a while. Pros look for single-family real estate and multi-family real estate. But there are different things to look at for each of these. Let's start with a single family. Now, the cool thing about this is if you buy a house that's say $300,000 in a $400,000 neighborhood and you put 5% down, that means your loan is only 285 grand. I mean, think about it. 5% of 300,000 is 15 grand. So your loans are 85 bucks. You fix it up, which is going to take some extra moolah or some sweat from you, putting in the effort, painting it or whatever. But wait a minute. If you live in a $400,000 neighborhood and have finished remodeling your property and only owe $285,000, you now have $115,000 worth of equity. That means you can now refinance your home and stop paying mortgage insurance. This is why we say not to worry so much about mortgage insurance. It's better to do as the pros do and focus on getting a good deal. If you get a good deal, the options open up. If you get ripped off and get a big, terrible deal, you might get some form of protection from the mortgage. In reality, the mortgage insurance protects the lender. If you want a property that's easy to maintain, you should buy new construction. Buying a flip is more expensive and doesn't offer the same benefits. House hacking or how to make thousands from real estate are tactics for lower cost, not making money per unit financially. If you want properties that generate more income in a shorter amount of time, buying multifamily real estate is an option. Otherwise, buying fixers will raise your expenses exponentially. Buying low-rent properties means comparing the market price to what it rents for. If you want to buy 2 duplexes, approaching a real estate agent or property manager is recommended. You might ask how much you could get for them on the open market, and then how much it would cost to rent each place. Real estate investors should avoid paying above market rate for properties in an area. Overpaying will lead to a bidding war and possibly lose money on the deal. While the market rent is $800 per month, an investor can easily purchase a multifamily property at $600 per unit. With this low-cost investment, this could increase in value over time due to changes in the market as well. Remember, the cool thing is you can always move and do it again. Step 7. Sometimes, you need to get your hands on other offers and out of the office before negotiating a good deal. If you don't know what other offers are available and where they'll play ball, then negotiations don't happen. To negotiate, you need information. Deals are won because they offer better terms. That's what the pros do. And you want to make sure you act like a pro by acting like the agent on your side would act, even if you're just starting out and working with your agent on this. The pros know you're going to use your home inspection to look for issues, such as signs of foundation issues or a sewer line on the roof. Those are the big expenses in the structure and important red flags that need immediate attention. Basically, those are big ticket items, or if someone has illegally added anything to the house, like a deck or an addition that is not permitted by zoning regulations. Electrical and supply pipework can be easily skipped by most homeowners, and in most cases, there is not a need to hire contractors for these services. However, typically, the home inspections in these cases are eliminated instantly when you don't want to send out every contractor available and spend $700 on 10 different packages. Day 1 of your home inspection moves backward until the day before you started it so that you can allocate money towards other projects instead. So you don't spend a lot of money on a home that isn't in your budget. Once the home inspector tells you it looks like there are major issues with the drain lines, do what comes naturally and call for a plumber. Can you help me out? I'm trying to get a leak under my house fixed. I think the problem is with the sewer lines. Can I open up the toilet and stick a camera down there? It might cost $200. Are you good at that? Absolutely. Let's go over here now. This can be quite common. If the flags pop up, you'll know what to expect and will only want to enter into an agreement with a traditional bid. So beware. It's easy for people to scam you and do a shady job. People will often offer to renovate entire properties by bidding them and then walk away with the profits. The way to do it is this. If you need flooring, you go to a floor store. If you have an electrical roof issue, guess what? You'll call, electrician. Hey electrician, I've got a problem. I'm buying this home. It's a rental property and I really want to make sure it's safe for a tenant. Can I hire you to fix the problems in my home inspection as cost effectively and safely as possible? And guess what they're gonna say? They will say, yeah sure, we'll come on over. You know that way when they ask, do you want to replace all the wiring in your electrical system? You answer, you know we don't have the money to do that. Is there any way we can make the current electrical system safe? And it's a rental. Most of the time, they say, no problem, it's just a rental. We can get this rental secured for you easily, so it will be safe. Just boom! This is how you save money. A pro maximizes the value of their dollar and a noob replaces everything and builds a new property. Alright, just know that in the future, your goal is building wealth, not spending. The two most common newbie mistakes are not replacing elements which are broken or torn, or not upgrading when you buy. It's often common for people to purchase a product that meets their needs rather than an upgrade. If you're going to be living in the house long term, it's a waste of money for the current school year. You only want stuff that appeals to 95% of people. Rental homes rarely remain dateless or outdated. The gear you use and build will change, but that doesn't matter if you're still living in your rental house when you have a net worth exceeding $5 million. Step 8. You will come to an agreement on the price of the house after you reach an agreement on the transaction. After negotiating, if you find any issue with the house during inspection time, it's highly recommended that you raise this issue in a nice and reasonable way without having to ask for credit for repairs, as this can cause tension during an already tense situation. So, if you have your home inspection, we don't encourage you to write a letter to the seller going, hey, you know the carpets are nasty? We want $2,000 to replace the carpet. You should have known about that going into the deal and not expecting them to just take care of it for free. Instead of having to sell your home for $3,000 or less and then using the money from the sale to cover other costs like closing costs, you can try asking the seller for $5,000 in order to hold off on selling. This will help you cover your closing costs. Closing costs are typically between 1 and 2%. If you get a lower interest rate, your loan will have more expensive closing costs. If you get a higher interest rate, closing costs will be less expensive. If you know the higher rate is going to be more beneficial for you later, then it may make sense to take it. You can also avoid refinancing if you don't want mortgage insurance for whatever reason. Talk to your lender about other ways of getting rid of that mortgage insurance. Step 9. When starting on a project, make sure to follow simple steps. The first step is to just rip out the whole house and put it back together. Don't take any big steps before you carefully plan each move. Instead of asking yourself all these questions, ask yourself a simpler question. Can I keep this? If not, then what options are there? The next question would be, can I keep the kitchen cabinets? Those are the big things. Go ahead and throw down new carpet, paint, furniture, and other luxury changes you'll need to tackle this huge project. Make sure you get your property cleaned up in order before starting to work on it. Next, do your minimal demo. Then have your plumbers and electrician prepare valves and electrical equipment such as ceiling fan brackets. Scrape your ceilings, repair the drywall, paint the walls, etc. Throw down countertops and flooring. Install light fixtures, plumbing fixtures, appliances, and finish by replacing any toilets you need to keep on site in case. Then do your landscaping last. You don't need to overspend on landscaping materials that look great with a little lawn. Dramatic changes in landscapes often cost a lot of money, but you can incorporate lots of natural landscaping to save money by doing these repairs yourself. Step 10. When it comes to renting out your rental property, consider what a high-quality tenant is worth to you. Take someone who's stable and has the necessary income rather than one that only pays you more money. A big mistake. With a process that is efficient and via real estate investment, you build yourself a business with in turn improving your lifestyle. As you progress, you take advantage of the systems already in place to move into larger properties and so forth. Now, you could build your wealth without moving. A cash out, refinance, and have money from your first property to help you create a large real estate portfolio. You can do this by bank hacking with 25% off the down payment. That's it for this video, Real Talker. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!